So today has seen the release of the nationwide house price index covering the period up to April 2024, and it shows that house price growth is slowing. Let's take a look at the report. So as you can see, UK house prices fell 0.4% month on month in April, and the annual rate of change has slowed to 0.6% from 1.6% in March. Looking at the detail, as you can see, monthly change in April minus 0.4%, and in March it was minus 0.2%. The impact on the annual figures is 0.6% annual growth, down from 1.6% annual growth last month. The average price of a property in the UK is now just under 262,000, which is around about an £800 decrease from last month. So commenting on these figures, Robert Gardner, the Nationwide's chief economist, said UK house prices fell by 0.4% in April after taking account of seasonal effects. This resulted in a slowing in the annual rate of house price growth to 0.6% in April from 1.6% the previous month. The slowdown likely reflects ongoing affordability pressures, with longer-term interest rates rising in recent months, reversing the steep fall seen around the turn of the year. House prices are now around 4% below the all-time highs recorded in the summer of 2022 after taking account of seasonal effects. Now, if you're already on the property ladder, it's not such a problem, apart from the fact that if you have a mortgage, you will now be getting used to the higher interest rate environment, and your mortgage payments will likely be increasing. The people that are finding it the most difficult, though, are first-time buyers, and they're finding it difficult for a variety of reasons. The report goes on to say, recent research carried out by Census Wide on behalf of Nationwide found that nearly half of prospective first-time buyers, who are classed as those looking to buy in the next 5 years, have delayed their plans over the past year. Among this group, the most commonly cited reason for delaying their purchase is that house prices are too high, but it's also notable that 41% that said the high mortgage costs were preventing them from buying. Now, there is a chart over on the right, but I've expanded that so that we can have a quick look at it in a bit more detail. So the main reasons for delaying the purchase in April 2024, as you can see, the majority is because house prices are too high. Next in line, it's because mortgage costs are now higher. Further down the line, cannot afford extra costs involved in buying, those saying that they can't pull together a sufficient deposit, and then lastly, those that can't borrow enough. So as we've said for a long time, the higher interest rate environment does mean that affordability is getting more difficult and you can't borrow as much as previously hoped. But those talking about they cannot pull together a sufficient deposit, they may want to consider the 1% mortgage that we've been talking about from one of the UK's lenders, where you need a maximum £5,000 deposit, and then subject to affordability and criteria, the lender will be happy to lend to you. And that £5,000 deposit as a maximum is available on purchase prices up to £500,000. So therefore, it's a 1% deposit. Let's just take a look at another graph that the Nationwide produced, and that's the UK average house price in April 2024. If you go back to April 2014, you can see the average house price was just over £180,000. Since then, it's been a steady increase up to the highs in April 2022, when we've then seen a significant drop due to the inflation, the higher Bank of England base rate, and just cost of living crisis. Prices have fluctuated slightly, and now they're showing a steady increase again. The next chart that we want to take a look at is the annual percentage change in UK house prices. Again, if you go back to April 2021, you can see that there was significant growth in the house prices during that time, until again we hit April 2022, and then house prices have dropped significantly up until October last year, showing negative growth, and now we seem to be back into positive territory, although it is dipping slightly, and this is likely caused by the cost of living crisis and the higher interest rate environment in which we're finding ourselves. The last chart that I want to take a look at from the Nationwide is the UK house price to earnings ratio. Now, the grey line in the middle is the long-term average, showing that you need roughly 4.5 times your earnings to buy. Go back to 1994, you can see that back then it was 3 times. And since 2004, we've been above the long-term average, again, reaching a peak in 2022, and then it's fallen slightly, and who knows what's going to happen to this line at the end of this graph. I suspect that over time it's just going to go back up again. So, what do you think to these numbers? Were you expecting that house prices had dropped this month? And if you're out there in the market looking for property right now, how are you actually finding it? What are your feelings about how property is priced? Is it realistic? Is it overpriced? Is it causing you problems with your plans? Now, are you even seeing more stock on the market? We are hearing that agents are reporting that there is more stock available. What are your thoughts? Are you finding that this is actually the case, or is that just simply not true? Don't forget that this information from the Nationwide is only based on a sample sample of their own mortgage customers. So it's not a true reflection of the whole market. The only way that we can look at that data is from the Land Registry. And of course, don't forget that the Halifax also produce their own house price index, which has slightly different numbers to the nationwide, but that will be in a future video. If you're watching this on YouTube, then there is a link to this nationwide house price index below, so please do go take a look at it for yourself. But as always, thanks for your support. Please do like and share the video, and watch out for the next one, which will be with you soon. Take care.